Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. What's up, everybody? Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you all had an absolutely amazing trading day yesterday. As we head into Friday, we are wrapping up the week. For those of you new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. Real quick announcement, we are actually going to be doing another traders social gathering next week in Washington, D.C. So any of you that are in the Washington, D.C. area or know anyone in the Washington, D.C. area, I will pin the area down in the comments so that you can register so we have an RSVP. This is not a pitch fest. This is really just getting together, having drinks, having a good time, getting to know each other. So a lot of people are afraid that when they come to these things, it's going to be about a pitch. That is not the case. It is only a chance to meet other traders and get to know what y'all are doing. So I'll put it in the comment section down below. All right, let's go ahead and dive in. So the S&P this morning, we're up 16. Now, yesterday we had a live trade room, and we were looking at this 15-minute level in the live trade room yesterday. Now, this level from the live trade room, we got a really nice bounce off of this area right to the opposing fair price value area. This we had switched to a confirmation entry because we'd come close to it and weren't able to touch, and because we'd already touched it once. Well, if you notice, look at this. We came into it, touched it once here, moved away, switched it to confirmation, came pretty close to it, hit our 15-minute reversal, got a nice little move out of there, so leave me a comment down below if you're able to catch that 15-minute reversal. Came into the confirmation area, you may or may not have been triggered, and we got a little move away. But notice how weak the move away was, right? 1, 2, 3, 4, 5, 6. So even if you took the trade, you're moving your stop to break even. So that the next time it came in, because of this basing in front of the level, it invalidates it the second time. Now, I will tell you, my gut told me that we were going to get a little bit of a sell-off down into here, and I was really hoping for a bitter pullback, and I thought we might end the week around this number. Turns out that because of the basing here and the minimal reaction off of this level, that we were able to bust through that next zone. So I need to remove both of these levels, as that level worked out really, really well. Got a good demand area still down in here that I think is a good zone. When I look at this on a 4-hour scale, we have finally broken through this high upper wick right here. And I said in the live trade room a couple of days ago that we're not trying to trade this breakout. We were waiting for the breakout, and now we've got to trade a retest to a pullback. So this area in here could act as a pretty good little pullback zone. If I move to the 15-minute chart, I'm going to go to the 15-minute because I have a nice little overlap here. It's a 15-minute zone only because I'm going in to get this exact wick area right here. Now, we may not make it all that way down, but I think this could be a decent little reversal point, to retest the breakout. Next, the NQ, very much almost an identical picture, except it didn't trade as deep into the confirmation area and actually just popped through the confirmation area. But the reversal trade worked very, very well on the smaller time frame level. Need to remove that zone, need to remove this zone. And then as this was able to give us a new high, this could create a new zone. So the key there is that it was able to thrust higher and give us that new high level. Inside of crude oil, so in crude, we had set up this little potential reversal point here as a confirmation entry, but we've gotten a little bit of basing here in front of it. Now, remember my basing. What am I looking for in basing? Well, think about it. If I buy here, my target's the opposing level of supply. Well, here's the opposing supply level. So the basing is less than 2 to 1 away from the entry. And by being less than 2 to 1 away from the entry, it invalidates that zone, right? So because of that basing, we've invalidated that zone a bit. I do want to take a look, though, up above. This area here could be a little reversal point if you wanted to get short on some sort of a rally. My gut tells me that we may see, prices coming up here. Looks like we've put in a bit of a base. We may get a little bit of a higher move, slightly longer term play. But if you want to hold that over the weekend, you'd have to make sure that you hedge using futures options. Taking a look at our gold level. So in gold, we've got our setup. We needed a little bit of a basing area in here before the breakdown. We got a little bit of a breakdown, but it hasn't really done anything. Technically, you don't have a big stop out or profit one way or the other. It's about a break-even setup at this point. And I still think we may break down from here. So if you're so inclined and you want to just give it a shot off of where we are right now, or taking a look at this kind of it's setting up in a little bit of a of a triangle pattern, you could take the breakdown below here if you're so inclined. I think it might be better off at this point to wait for price to break down and then to take the retest. That's probably going to be the safer play now in gold. I thought that breakout would work out pretty well, but it kind of got there and petered out. Didn't really give us a fake out. It just gave us a petered out. So looking at our bonds and currencies, not really much of anything to report. No real change from our prior sessions, except for maybe the euro. The ZN, we're sitting above our gap area. The Aussie still moving, nothing really to report. Inside of the euro, we got this huge wick up just in front of this area here before coming down. So you may not have gotten in on here because of the lack of basing, but then we did get good basing here to give you another shot to get back in. So the euro is continuing its move down. Yesterday we talked about a much bigger picture of what does this mean to the U.S. economy, that we see the daily chart giving us such a clear breakdown picture. So that's a bigger conversation. And then the Canadian dollar is still in between its levels. Nothing really to add in that instance. Pound and the yen, you'll see, are also very similar. They're in between their levels of demand and supply. Nothing really to speak of in our currency markets yesterday of any semblance of really any need. So the only real true market moves yesterday were our S&P and NASDAQ move, a little bit of a shot in gold as well. But over the weekend, make sure if you're going to hold any futures positions over the weekend, you have them hedged and prepared for. I don't know how much movement we'll get today heading into a 3-day weekend. We've been seeing Friday sell-offs, so just be aware of a Friday sell-off towards the end of the day. But that's all I have for today. I hope you guys have an absolutely amazing 3-day weekend. We will not have a daily market commentary on Monday because the market's not open on Monday. So I will see you all, those of you that are Traders Army subscribers, I'll see you Monday evening. And those of you that are regular viewers of the YouTube will be back Tuesday morning. Thanks, everybody. Have a great day. See ya.